By the way, for the market, still very quiet, so it would be a good idea to get some focus in on the commodity markets now. Manisha Gupta joins in for that. Manisha, after that big spike up in crude, how are things shaping up?
Well, the good thing is that we are still holding those kind of levels there. So it hasn't really been a flash in the pan kind of a thing. So the first day of trading day in April, and you are trading with nearly 5.5% of gains coming in for the crude oil prices. So it's up in Asia right now. You'll want to see on how Europe and US pan out as those markets open as well. But while we've started April on a very strong note and we are trading at a 1-month highs right now, for the month of March, the crude oil prices closed with a decline there. We were down nearly 5%. And then for the quarter as well, it was a sharp decline of nearly 7% for the March quarter. And this has been a third quarterly decline that we have seen come in for the crude oil prices there. Remember, we saw a 15-month lows of $70 a barrel in the month of March as well. So from 70 to 85 has been a strong gain. Actually, it all has come in last 7 or 8 trading sessions where we have seen nearly 15% of a jump up come in for the crude oil prices in last 8 trading sessions itself. The latest support clearly comes in from what OPEC and allies have done. It has been announced a surprise production cut of 1.16. Most markets were betting that OPEC will not budge from here. But clearly, OPEC is back in action and back in control as well. With 1.16 million barrels per day of a cut, with more weightages really being carried on in sense of precautionary measures and to ensure that there is stability into the market is what OPEC said. So much of the output cuts clearly coming in from Saudi Arabia and Russia. UAE and Kuwait as well have seen more than 100,000 barrels per day of a cut coming in. Other countries like UAE, Kuwait, Oman, Algeria also cutting anywhere between 40,000 to 200,000 barrels per day on your screens there. Well, OPEC output, when you look at the month of March, has been at 28.09 million barrels per day, which is nearly 7,000 barrels lower than what they did in the month of February there. So we are looking at lower and lower outputs there. Total volume cut of OPEC right now stands at 3.6 million barrels, which is 3.7% of the global demand. So that's a considerable chunk going out of in sense of supplies in the global markets. And not just that, the last couple of weeks have been strong because we've seen 400,000 barrels per day of an export halted from Turkey as well. Markets have seen strong Chinese demand coming back. And you also are looking at US inflation easing off a bit. That would mean that US perhaps will not go for aggressive rate hikes. And that is another thing that seems to be supporting the markets right now. Goldman Sachs report that came in last evening suggests that we are now looking at a $95 per barrel of an average for this year and $100 per average of a next year as well. So there are more bullish cues coming in. The market has been short, by the way, so we are looking at short covering and some buying as well, and that could really be supportive going forward in other time zones as well.
Okay, thanks a lot for that. So that is on the crude oil market.